The worst situation is over. The Federal Reserve has announced another interest rate cut, and they are preparing to stop quantitative tightening, or we just call it QT later in this video. Do you know what that means? It means the Fed is getting ready to start flooding the market with money so much that it could drown the entire market. The stock market is in for an even bigger celebration. But is this really true? So, when taking medicine and getting injections are suddenly framed as a good thing, have you already handed over all your money? Hello everyone, I'm Money Zen. Do you think capitalists make money before a financial crisis or after it? Many people will say, of course, after the financial crisis. For example, Warren Buffett entered the market to buy at the bottom after 2008, and then his wealth multiplied countless times almost instantly. But listen, buying at the bottom means buying at the cheapest price, right? Does that guarantee you're gonna make money? A stock that was once $100 drops to $50. You buy it. Can you make the money then? What if that stock stays at $50 and never goes up? Or what if, when it goes up to $60, you can't resist selling it to me? I bought it at $60, but the stock eventually rose to $600. You bought at the bottom, I didn't, but you only made $10, while I made $540. In the end, who actually made the money? You or me? In other words, buying low doesn't mean making money. Real profits always come from selling high. Then, let's think about this. If a flood is coming right now and your house is about to be swept away, what would you do? Wouldn't you try to quickly sell the house and run off with the money? So how would you do it? Would you have to slash prices like a supermarket clearance sale? But if you sell your house cheaply today, your neighbors might follow and sell theirs cheaply too. Then, could anyone actually sell their house? When housing prices are falling, would you buy a house? What is human nature? People try to avoid loss and seek gain. Prices are falling. What if I buy it? And then it drops by another half? I'll lose money, right? So most people won't buy a house when the prices are falling. They just wait and watch. So when we do business or investment, we always sell our products at higher and higher prices. Because people never buy when things are cheap. They only buy when it's getting expensive. And they regret not buying earlier. So, when a flood is coming, what you really need to do is team up with your neighbors. Make your houses more and more expensive and collectively push up the prices, so that you can not only sell your houses quickly, but people will also step in to take over at a high price. And your profit will be several times more than usual. So do you understand? If capitalists want to sell assets, they don't slash prices, because what they are selling today is not just a few shares of stock, but millions of shares. The cash they take out is measured in hundreds of billions, even trillions of US dollars. Think about it. If the market suddenly loses trillions of dollars, won't it instantly crash? At that point, can those capitalists still sell their stocks? Even if they bought at a very low price, they won't be able to sell at a high one. So capitalists need a very long time to sell assets, maybe a few months. Or even like Buffett, who now holds the largest cash reserves in his history. It took him a whole year. That's why capitalists cannot sell at low prices. Instead, they will coordinate with other capital and continuously raise the price. This is why, historically, the times when capitalists truly make money are before the financial crisis, right before the bubble bursts, because only then the retail investors are willing to hand over their money. And the more expensive the stock is, the more people buy, and people are more willing to take the load at the top. And you will see, since last year, Buffett has been selling stocks and holding a massive amount of cash. Mark Zuckerberg, Jeff Bezos, and the CEOs of Oracle and JP Morgan, they are also selling stocks. As a result, they avoided a stock market crash in April. And Jensen Huang, he sold stocks last year, and this year he's selling again. The US Securities and Exchange Commission publicly announced that in October, he had been selling stocks through dozens of separate trades, and even now, they haven't bought at the bottom. Why? If all these capitalists selling stocks at the same time is just a coincidence, have you ever seen someone take medicine just because they're too healthy? And now they are preparing to give him an injection. If the US economy is still strong, the Fed should be raising rates and shrinking its balance sheet to cool the economy down. Why is the Fed rushing to cut rates and stop the balance sheet reduction when inflation hasn't come down yet? Did you know that US banks are starting to collapse again? Did you know that the money Wall Street holds at the Fed is empty now? So why would the Fed stop QT? You see, every time I speak these things out, I will offend the interests of certain powers. As a YouTuber, what I should do is follow human nature, play to the crowd. When the stock market is rising, cheerlead blindly. When the market is falling, tell everyone to run. That way, more people will like me, right? But I just can't bring myself to say those things. If risks are only explained afterward, what's the point? It's like I've been talking about buying gold and silver for a whole year, and we already sold them. Then you ask me if it's okay to buy. Is there any point? First, the Fed stopped the QT. Is this good or bad? Why is the Fed doing QT? Officially, they said, because there was too much money in the market, which triggered inflation. But why was there too much money in the market? Because during the 2020 pandemic, the Fed printed money with no limit and used it to buy US treasuries, lending money to the government and capitalists to spend. So there was too much money. In other words, the market had more money because the Fed bought US treasuries. So now, to reduce the money in the market, shouldn't the Fed do the opposite? Sell US treasuries and take the money back from the market? This is called draining liquidity. So, all along, we accepted this narrative that the US economy was too good, there was too much money, and inflation was too serious. So the Fed had to do QT. But here's the problem. Is inflation not serious now? The Fed's goal is to press inflation down to 2%. What about now? Inflation has rebounded to 3%. And with the US government shutdown, no one knows the real data. At this time, the Fed says it is preparing to stop draining liquidity. Why? There are only two reasons. First, the truth about its quantitative tightening was never really about curbing inflation. Second, the draining of cash has pushed the Fed itself to the limit. So you have to see this all the way to the end. Folks, when did the Fed start QT? 2022, its assets were $9 trillion, but now have shrunk to $6.3 trillion. This means the Fed sold $2.7 trillion in assets, which means without leverage, at least $2.7 trillion has been burned from the market. What does this mean? It's simple. Which country has the most foreign exchange reserves in the world right now? China. China spent 48 years opening factories, selling clothes, selling its products to the US. And how much money did it earn? $3.2 trillion. And the Fed, through QT, only took 3 years to drain $2.7 trillion from the world. That's 80% of China's foreign exchange reserves. And that's not even the real situation, because the reality is, this is multiplied by 10 times leverage. Think of it this way. The Fed initially printed $2.7 trillion, and that money eventually goes to the banks. When the banks lend out that $2.7 trillion, the money will eventually come back to the banks. For example, I'm the bank. You borrow $1 million from me. I put the money into your account. You certainly have $1 million as a number in your account, but the cash is still in my bank. You spend that $1 million, and in the end, someone else's account gets the money, but the cash is still in my bank. So, even though the banks only have an extra $2.7 trillion, the banks can treat that $2.7 trillion as $27 trillion to spend. So, on the surface, the Fed only drained $2.7 trillion, but in reality, it might have drained $27 trillion from the market. Even if that's exaggerated, just half would still be around $13 trillion. That's almost the money of all of Europe. So, after hearing all this, first, we know they haven't actually stopped QT yet. They're just preparing it. So, is the market already short on money? The US itself should also be very short on money, right? Unfortunately, let's look at this chart of the US money supply. How much money is in the US market? You can see that after the 2022 balance sheet reduction, the money in the US market continuously decreases. So, countless US banks directly collapsed in 2023. In other words, If the Fed drains its own liquidity, then the US will also experience a banking financial crisis. Now, let's look at the chart again. After 2023, did the Fed stop the QT? No, it has been shrinking its balance sheet until now. Yet, the money in the US market keeps increasing, even reaching a new high since before the Fed's shrinking in 2022. More directly, since the US banking crisis occurred, even though the Fed is still shrinking its balance sheet and taking money back, the money in the US market has actually been increasing. Why? Because the US loosened banking regulations at that time, allowing US banks to leverage more to lend. As I said earlier, even if I only have $1 billion in my bank, if I lend it out, it will eventually come back to my bank, and I can lend that $1 billion out again. Before, I might only be able to lend that $1 billion out 5 times. That's 5 times leverage. But now, the US allows me to use 10 times leverage. This is called finance. This means that while the Fed has been doing QT, the money within the US has not decreased. It has been increasing. That's why the US inflation can't be controlled, because the money never actually went away. So, who is the Fed draining liquidity from? It's the countries outside of the US. Their dollar holdings are constantly decreasing, and these countries can't print their own US dollars. If the US faces trouble, the Fed can eventually just stop QT, or even revert to quantitative easing and give dollars to its own bank. But other countries can't, because only the Fed can print money, which means the real reason for the Fed's QT is to make the world short on dollars, driving up demand. And the place with the most dollars in the world is the US. So the rest of the world has to borrow high-interest loans from US capitalists. With tariffs on top of that, it's even harder for the rest of the world to earn dollars. This is why the European and Asian economies have been struggling in recent years, while only the US has been doing well. This is exactly why we heavily focus on US stocks in 2023 to 2024. Until this year, I cashed out my US stocks and shifted to gold and silver, which are just beginning their bull markets. If you've seen my previous videos, you know the reason, and I won't repeat them here. So, why is the Fed stopping its QT now? Because 2 more US banks are collapsing now. What does it mean? Folks, although the money within the United States multiplied through the leverage of the banking system, the bank lends out the money. You deposit the money back, then the bank lend it out again. But there's a problem here. If people withdraw their money or don't redeposit it into the bank, this banking game stalls. Simply says, banks lend money with leverage. But if there's a bank run, or they can't recover the loans, they're gonna having trouble. So every bank is required to keep their money for at least 10% deposited with the Fed. You can think of it like insurance. If your bank suffers a run or has too many bad debts, you can go to the Fed and withdraw this 10% to cover the liquidity crunch temporarily. If that 10% isn't enough, the Fed can even transfer money that other banks have deposited to loan it to you, to help you get through the crisis. This money that must be held at the Fed is called the bank's reserve requirement. The more reserves, the safer the bank is when issues arise, and the more money is available for emergency turnover, even though each bank is only required to keep 10% of its deposits with the Fed. But most banks deposit 20% for safety. To put it more simply, these bank reserves are the life-saving blood bank for the entire financial sector. When a crisis happens, this money is used for transfusions. And because of this, every time this money rapidly decreases, a collapse occurs. For example, during the pandemic in 2019 to 2020, this money rapidly decreased, and the US stock market crashed. So the Fed had no choice but to print unlimited amounts of money. And in 2023, these reserves also rapidly decreased. And as I just mentioned, US banks collapsed one after another. The US had to ease regulations. What about now? This money has decreased to the same level as in 2023. Why? Because every bank has increased leverage, tried their best to lend money out, and there is no longer depositing with the Fed. What else? The US government has issued $2 trillion more in US treasuries in the last 2 months, which means they borrowed $2 trillion from the market. Then who is lending the money? The Fed is still doing QT and selling treasuries. There's also no clear sign that countries around the world are buying US treasuries. So it's basically only domestic US banks, investment bank, or any other institution, etc., left to borrow. More simply, the US government has now further drained the reserves of American banks. But the Fed predicts that this blood bank, which is the bottom line of the reserve requirement, is $2.7 trillion. And now there's only $3 trillion left. Which means if this money continues to decrease, almost all US banks will run out of money to return to their clients. And started this month, 2 more banks have already crashed again. The reason is because they have too much bad debt and they can't recover the money they lend out. So a lot of people are asking, US stocks are way too high now. And gold and silver have risen so much. Is it okay to invest? People who are asked this, their understanding about the investment is still stuck at insider information. Holding long term and buy low, sell high. And then, in the end, it's the opposite. Buy high, sell low, or get trapped. Why? Because they use the institutional investors method for retail investors trading. And now is the main point. Listen carefully. Since the 2008 financial crisis, the US has already built 2 safety nets to prevent this kind of liquidity crisis. In simple terms, it's to prevent the entire market from running out of money. The blood bank, which is the bank reserve requirement, it is the first layer. Now it's starting to break again. What about the second layer, the Fed's overnight reverse repurchase agreement? What is that? You can think of it as Wall Street's piggy bank. Banks, funds, and the investment firms, if they have too much money, they will put it into this second blood bag, the overnight reverse repo. As long as they deposit it there, the Fed will pay them 4% interest, and they can deposit today and withdraw tomorrow. It's very flexible. So, during the 2020 pandemic, the Fed printed countless amounts of money and lent it to Wall Street at 0 interest. Then, a few years later, when the Fed raised rates and started QT, these Wall Street players took the money they borrowed at 0 cost and put it back with the Fed to earn 4-5% interest. This second blood bag used to hold a massive $3 trillion. Then, what's this money for? Actually, it was the same if there's a shortage in domestic US dollar, or if there's another bank was going to fail. The Fed would take money from this second blood bag and give it to those banks to help them for turnover. And now, the blood bag overnight reverse repo is empty now, with only a few tens of billions of dollars left. In other words, this blood bag, which originally had $3 trillion, has been completely drained. So, in simple terms, the US financial system is already facing a liquidity crisis. The Fed can no longer continue QT and took the money from the world. At the current rate, both of these blood banks will reach the bottom line by December. And because of this, the Fed has to stop QT in December. Then, here's the problem. Stopping QT only means they are no longer withdrawing money. But can it solve the liquidity crisis? Here comes the most important part. Everyone, the US dollar index has been falling from the start of the year to the end. What does that mean? Doesn't it mean that global capital is selling the US dollar and converting it into other currencies? In other words, capital is actually fleeing the US. This is undeniable. It can't be faked, right? And didn't I say at the beginning, every US billionaire that you can name was selling stocks last year, and after the stock market crashed this year, they're still selling, right? Commercial real estate and office vacancy rates are hitting historical highs. Small and medium-sized banks are holding large amounts of bad debt from commercial real estate loans, auto loans, and the unemployment rate is soaring. Then you look at the average American. Credit card debt is over $1.1 trillion. The delinquency rate continues to climb, even exceeding levels from the 2008 financial crisis. Aren't these all ticking time bombs? Logically, the stock market should have collapsed long ago, but at the same time, although US stocks experienced a crash in April, they have quickly rebounded to new highs. It's up 13% since the start of the year. Although not as much as gold and silver's 60%, it's still a new high. This is visible to everyone. So doesn't that mean the so-called smart money is already positioning its assets in advance? Is the US economy really so good that it can ignore everything? But as I just said, the Fed's two blood banks are almost running out of money. Inflation hasn't been suppressed yet, and they're rushing to cut interest rates and stop QT. Isn't this the exact same thing they did before the 2007 financial crisis? In 2007, inflation was still very high, at 3.8%, far exceeding the 2% target at the time. Yet, the Fed rushed to cut rates in 2007. It was proven afterward that the rate cut came too late and couldn't prevent the collapse of Lehman Brothers. It was like trying to turn the steering wheel after the Titanic had already hit the iceberg. So, even though the Fed cut rates in 2007, the financial crisis didn't explode until 2008. As you can see, the US stocks were actually hitting new highs in 2007. And now, are US stocks also hitting new highs? So, if the US economy is doing so well, and that's the real reason for the US stocks are going up, that doesn't convince us. So there's only one reason left. As I said at the beginning, big players always pump and dump before the crisis. Because only when the stock market seems to only go up, people are not only willing to hand over their money but also buy at higher and higher prices. So you're gonna notice now, what's being played now is called The Boy Who Cried Wolf. After the April crash, the stock market quickly rebounded. The US and China sanctioned each other this month. The market fell, then rose back up. Banks collapsed. The market fell, then rose back up again. This is all to make you believe one thing, that all bad news cannot affect the continued rise of US stock market. To make you to believe in this myth, to tell you that all risks have been priced in and you can safely enter the market now. If you still don't believe in the US stock market, that's fine. Because the US has put the money in your pocket, but you throw it away. They lose nothing, you lose. You don't believe it the first time, you doubt it the second time. But when they do it 3, 4, or 5 times in a row, each plunge will be seen as a buying opportunity. Will you still hold on to your own judgment? Eventually, you'll be filled with endless anxiety, buying at a higher level and a higher price. So, the US just needs to create small plunges, then rebound. And they can get more investors to hand over their money. And before each plunge, there are already insiders making money by shorting the market. Wasn't that obvious during the April crash? Businessmen with good government connections all made money by shorting. So I'm not saying this to convince you or make you believe me. Because when it comes to investing, you always have to believe in yourself. What I hope to achieve is that you can have my perspective. And I don't want you to be scared. Honest advice is often harsh. I also welcome brothers and sisters with different opinions to leave a comment and discuss rationally with us. Due to time constraints, I have to end here. Alright, I'll continue sharing tips on how to become wealthy, how to be an entrepreneur, an investor, and achieving financial freedom every Sunday at 8:30 p.m. If you don't want to miss out, make sure to subscribe my channel and click the little bell. And generously share this video. I sincerely wish all of you who like this video will reach financial freedom soon. If you have any questions, please leave them in the comments. As long as you can find 1 or 2 useful sentences in today's content that can help you live a better life, I'll be completely satisfied. Alright, I'll see you next week. Bye!